GM. GM. Saturday. It is the 11th of May. Daily levels. So we don't have any ETF flows. What happened midweek was just an anomaly last week where we had the panic selling day on Wednesday and then we had the panic buying day on Friday. So 500 mil outflows and then the basically FOMO back in with 3.7 and 2. And after that, back to just the regular trend, which has been low inflows or outflows. We've had that ever since. So the current level of demand has been reached. We've reached the saturation point. There's no more consistent demand from ETFs at the moment. That won't remain forever, but as that's how it is now, you should expect it to persist. Right? Just like we had weeks of high flows. See here, once we bottomed out in January, we had weeks and weeks and weeks of consistently high inflows that allowed us to drive all the way up to the top, where we had 2 billion at the top. It's now flipped and gone in the opposite direction. And there probably needs to be some catalyst again for that mass ETF buying. And also, I don't think they can buy at the same rate twice. So when you've had, huge inflows, and then let's just look actually at two things. I've got the visible range volume profile on here. There you go. And first, I'm looking at it from the launch date of the ETFs here. They launched on the 11th of January. So the point of control is lower, and the distribution of volume is very uneven, to where we had a lot down here, we had a little stop over in the middle, and then we have a lot up here. And obviously, you can see so much pointing to that 64k level. It's also from this last impulse candle here, up into the highs. I took that one because we've reached that level, so you can argue that until this impulse is broken, we could be trading in this wider range, but obviously it's distribution so far. We've pushed above, lots of volume trade at the highs. The peak point of control was here, 64. We're below that, we've retested it bearish. It's also from the entire move, for the entire existence of the ETFs, it's been all of that, and we're stuck below it here. So you've got a gap all the way to 52. It doesn't mean we just drop there straight away, but anything that happens in here is much more likely to be distribution before lower until it finds some kind of footing, until it finds an actual bottom. That can be higher. It might hold 60, but until you get above 64 and start to accept there, that's not valid. And obviously until you break, especially 58.2, until you break 58.2, it's just consolidation, but it's bearish consolidation, right? It's not bullish. We've had plenty of bullish consolidation, but this is bearish. This is consolidating after moves down, rather than everything over here was consolidation after moving up. And when you draw it then from the bottom back in September going into October, here's how the distribution looks. The vast majority was actually traded around this reaccumulation range at the 42k level. And out of all of this 6-month rally we had, we're now falling back inside the value area. So anything above here is outside the value area. You would expect price to trade within this level, and that's what it's doing. It's below 64. It's falling into this. That opens up all of this range as potential. Now, is it going to go all the way back 26? No, I don't think so. Could it go to 42? It could. That'd be a full retrace. It wouldn't surprise me, but I wouldn't fully expect it either. I think Bitcoin just needs to form some type of support. And if it keeps testing these areas and not holding, right? If it keeps testing these areas and is unable to hold, like it tried to hold 60k for a long time. I'll just drag this back across here. Right. Tries to hold 60k, unable to. Tries to hold 57k. Initially a bounce, But if that retests and holds, that would be your sign that it's actually holding. I don't think I would have the confidence to say that's holding yet. And, otherwise, this is just a weak market with constant downtrends. The only bounces so far are short squeezes. And if I take off the VRVP, if I take that off, let me just look here and zoom in. So, all the way down here, since we had that crash down on the 13th with the war fears, everything to the upside has either been just a reaction bounce to fill in inefficiency or a short squeeze, where you take out some lows, you squeeze people up, then it fails. Then you have selling on the way down, heavy selling. Then you have a reaction bounce, just a squeeze. Then you have selling, then you have a short squeeze. Then you have it collapsing. The demand is just not there. And it took billions of ETF flows to get us above 60 and get us to 70. And with those ETF flows disappearing, I think the market is going to test those entrants and push lower. Because when you look at what happened over here, if you're looking to find the best entry point, you're talking about you want to buy when people sell and panic. The market's already seen what happens when it goes below 60. You get mass outflows on ETFs. That was here. And if that's able to push lower again, what would you expect to see? You would expect to see even greater outflows, more capitulation. And I'd be of the opinion that the smart money, the slow money, the whales, the OGs would want the ETF, fast money, new entrants to get tested. People assume ETFs are like long-term buyers. There's obviously some, but there's a huge amount of people as well that are just taking this as a trade. And are they going to keep holding? If they've been buying Bitcoin above 64, which we know they have, right? A lot of this, like the majority of this volume distribution has been above 64. And if their entries start to get, they're underwater, a bunch of them. If they start to get pushed down and they're down into a loss, they're going to sell. Right? Not every dollar. There is a bunch of ETF buying that is going to be stickier long term, but I certainly wouldn't think that this is going to hold the market up or be somehow really bullish. Because if they were truly bullish, there'd be more buying. There's no ETF buying. There's no inflows. Right? So why are the inflows not higher when we're at these, supposedly, people would tell you these are like discount levels. Get your Bitcoin cheap, 60K. You wanted 60K when it was at 73. Now you've got it. Well, no one's buying. And I don't think 60K is cheap. Not in the recent history of Bitcoin. I mean, it's been 60K only for like 2 months. 3 months ago it was in the 50s. 4 months ago it was in the 40s. So I wouldn't think that people are tripping over themselves to buy a 60K Bitcoin. As for the data, looking here at something that concerns me purely from an open interest and price perspective. Price has been down. So since the daily close, or it's actually a 6-hour close, but since the close of this nuke candle to where we're currently at, where there was a big liquidation and open interest got wiped, right? Bitcoin has increased in open interest, but decreased in price. That's a divergence. That divergence is bearish if price goes down. It's only bullish if price goes up. If there's a divergence of OI and price, and OI is rising while price declines, but then price starts to go up, then you could reasonably say the shorts in this build up could be getting squeezed. But it's going the opposite way so far. And this build up has been 16,000 contracts, which at current price is 60K, is about $1 billion. Right, so there's $1 billion of open interest built up on BTC. And the liquidations are telling you a story here that consistently the higher clusters and individual spikes of liquidations are longs, not shorts. It has pushed up several times here and here and here and here and even there. And the short liquidations are just not equivalent. So the market is always long. Don't forget that. The market's always long. People in crypto are always long. Will there be people shorting at every turn? Of course. But after Bitcoin's gone from 25k to 73, and you've seen meme coins go crazy and meme coin super cycle, which is nonsense, and all this kind of stuff, the market's long, inherently. So the risk is far more to the downside. Forget what you think people are saying online. If you think people are bearish online, their positioning does not reflect that, right? The average person on Twitter who's scared and bearish doesn't even have enough capital to affect the market with shorts. And we know they're long. And it's not just BTC. It's the altcoins they're holding. Because what has always been true, always been a constant, is that if Bitcoin goes down for long enough, altcoins will go down. They will not survive a Bitcoin collapse. They can be stronger on lower time frames, but they will not survive a Bitcoin collapse. And so if you think some people are shorting Bitcoin, and that is going to overwhelm the fact that every single person is long, right? Every single person who's holding spot is long, even if it's just spot. Now, they can't be liquidated. But if price goes down 20, 30, 40, 50% on their alt, they're going to panic and sell. And the smart players know this. So there's an incentive there for the market to go lower, not higher, until people are shaken out. Couple that with the low volatility that we've had. Low volatility almost always leads to a drift lower in price. Because the less volatility there is, the less people are in the market trading because it's not moving as much. If Bitcoin's not moving as much because people aren't interested, it goes down. Because Bitcoin needs, and altcoins, they need interest, attention, activity. They need people to be trading them, holding them, buying them, to go up. But if nobody's holding them, trading them, buying them, they will just drift lower. Because there's always a natural seller. For Bitcoin, that's the miners. For altcoins, that's stakers who are selling their tokens that they're getting, or investors who are dumping their allocations. There's incremental supply always. There is not always demand. You understand? Demand comes sporadically in crypto when we get catalysts, we get hype, we get interest. Most importantly, we get green candles. Then people buy. But when that disappears, all you have are sellers. You have hundreds of millions of dollars of sellers every single day through all the VCs with their tokens, through all the smart money who bought lower on all of these coins, right? There's people in profit from 25k Bitcoin, from 20k Bitcoin, from 16k Bitcoin, from 30k Bitcoin, from 35k Bitcoin, and the same on the alts. There's smart money whales, OGs, that are always in profit when priced at higher levels, and they can keep selling and taking some profit. And they're the guys that need to be buying. So if they're selling because they're in profit and they can take profit, and the VCs are dumping their bags because they get them, unlocked monthly for most of these projects, and the miners are selling because they're always selling, and there's not enough demand right now, stuff will just drift lower. It's just an imbalance. More supply, not enough demand, and the ETF demand is gone for now. So there doesn't seem to be an incremental buyer of Bitcoin, which allows it to drift lower, which then eventually allows altcoins to drift themselves. And the typical path is that ends with some kind of capitulation or a really long, slow grind. It's pretty much always ended with a capitulation. It's pretty much always ended with a big red candle that makes people give up. You see a big wipe of open interest. You see a big liquidation. And you see, hysteria. And I don't think we've seen that yet. So I think that's coming still. I think it's going to be slow. I think it's, just to keep it really simple and not belabor the point too much, because I feel like a broken record at this point, but it's important to note. If anything that happens at Bitcoin below 64k is redistribution, right? That can be straight down, that can be up and down and chop, that can be chopping in any form. Any of this is just redistribution. It has to get above 64 to show strength. Simple as. Until then, it's going to be messy, it's going to be choppy. But being messy, being choppy, and holding at these levels doesn't equal demand, right? Take it back, and you can see many instances of Bitcoin being very slow, like it was here, when it lost 30k, and it spent from the 18th of July to the 18th of August, spent a whole month down here. This wasn't strength. Even though Bitcoin didn't break down right away, it wasn't strength, right? And even here, when there was strength, it was two months where it grinded lower, grinded lower, grinded lower, grinded. But it kept making new lows. It kept just taking out people who tried the long there, and long there, and long there. And so on and so on and so on, right? And I don't see an end to this yet. In fact, I see the momentum quite clearly being to the downside. On the lower time frames, I think the levels you want to look at, or the areas you want to look at, I would say would be Bitcoin's 1 hour trend, because when it's going lower, and if it's actually in a capitulation, it's not going to reclaim low time frame trends that easily, right? If it's actually having a significant decline, like you see here, where it grinds below the 1 hour, any attempts to reclaim it are just squeezes, and it grinds, and the like all of this, if you just track the 1 hour bands, it could never reclaim them until you saw the collapse. So right now, it's grinding lower with a red 1 hour trend. We had a short squeeze, but if you turn it green, just collapsed straight after, telling you that that was just a squeeze. We've came to a new low, right? Price is now consolidating here, whereas before the squeeze it was consolidating there. Just think in pure terms, supply and demand. There was demand to stop the market here, short squeeze up. After the short squeeze is complete, it dropped to a new low level and is consolidating there. Price is clearly showing that it's not accepting at 61 to 61.5. It's now accepting at 60 to 61. That's a small difference, but it's a meaningful difference. And a lot of this, I think, is just the fact that 60k is going to obviously have some resting orders there, and people are going to use 60k as that psychological level, and it's not going to just rip straight through it right away. But I also don't see this as being strong, right? Round numbers are not going to keep saving you forever, especially when they've been broken. 60k has already been broken. We've seen this. So there's positions built up all down here. 60k was holding over here, excluding some wicks. It was holding for weeks. It then lost it. We got above it. We're back towards it. I wouldn't be betting the house on 60k holding. But if it does, and it's going to continue to chop, it can still remain bearish like this, where you can have choppy around here, squeezing up, before it drops. This is very, very common. This is one of the paths I would expect, because it goes to fill most of the inefficiency it left. And none of this would be bullish, right? It would just be too much shorting going into the lows on the low time frames. And it squeezes, keeps stopping out shorts, filling most of the inefficiency of the gap down before continuing the direction that it's in. And then you've got CPI, which is probably going to be a catalyst for something. CPI is on Wednesday, 15th of May. That's probably going to be a catalyst for some type of move. Quite often you see the big data like inflation marking a temporary, sometimes even a proper bottom or top for whatever move. And so with the weekend, you could see further weakness. And in a simple sense, I think if we do something like this, if we don't break down before CPI, I probably expect CPI to be a catalyst for lower. If we actually go lower and grind down into Wednesday, I could actually see CPI marking a bottom, right? It depends how price moves in the lead up to it. It's all about expectations versus reality. If we look and feel really bearish going into CPI, it's more likely to actually provide a catalyst in the opposite direction. If price holds up going towards it, it's likely to provide the opposite side. Last thing I'll look at will be some of the higher time frame levels. So zoom out to the daily, take off all this. So in our trend so far, since October, the 50 and the 100 offered good trend support in January. 50 has no bullish trend support now. You can see this quite clearly. Didn't hold it, couldn't get back above it, held it bearish. So 50, from being a support, right, where it's supported, dipped below briefly, reclaimed really quickly, reclaimed within a week, has now become the opposite, where it's resistance. The 100, which was the stone cold bottom in January, has not provided that either. We dip right down through it, back above. Now it is holding here temporarily, but when that's holding with the 50 as resistance above, I think it's a matter of time before that breaks. And if you're looking at trend support, the level that has not been tested whatsoever is the 200s. And that would be something new for the market. So if you think about EMAs or moving averages, whichever, it doesn't matter. But if you think of the popular ones that people use the most, which are the round numbers, 50, 100, 200 are the most common, there's going to be buyers waiting at each of them. And so buyers were buying the 50 and the 100, and they bought the 50 reclaim. They're now selling the 50. Some were buying the 100, but not really. It went below it significantly. And now are they buying here, or is it just chop? I would lean towards it just being chop. But if Bitcoin goes to the 200s for the first time since October, that is where you'd expect there to be definitely some orders resting, definitely some significant liquidity to be grabbed. And if it goes there in a relatively quick move, I could see that being a bottom or being close to one. And if that doesn't happen and we do stay around here, you need to see, very simply, the 50 get reclaimed and price to consolidate above it. If that happens, that's really bullish. Because then it's shifting what we've seen, right? It's shifting away from the 50 being resistance, and resistance, unable to reclaim, resistance, into hopefully what you would see as support. So until that happens, I would expect this is more likely than that. And that's it. GM.